Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of Veeva Systems, ticker VEEV, a major player in the cloud-based software space for the life sciences industry. If you're looking to understand whether this stock deserves a spot in your portfolio, stick around because we're covering everything from financials to valuation, recent performance, and much more. Let's get started. So what's the big picture with Veeva Systems? If you're not familiar, Veeva is a company that provides specialized software solutions tailored for life sciences companies. Think pharmaceuticals, biotech, and medical devices. They've carved out a niche in this highly regulated industry with cloud-based platforms that help manage everything from clinical trials to customer relationship management. I'm excited to break this down because Veeva isn't just another tech stock. It's a leader in a very specific and growing market. Let's take a closer look at who they are and what drives their business. Veeva Systems, headquartered in Pleasanton, California, was founded in 2007 by Peter Gassner, who still serves as CEO. Their mission? To streamline operations for life sciences companies through cloud-based software. Their flagship products fall under the Veeva Vault platform, which includes solutions for research and development, quality management, and commercial operations. They've got a global footprint, serving clients in North America, Europe, Asia-Pacific, and beyond, with over 7,200 employees driving their growth. What makes Veeva stand out is their laser focus on this industry. They're not trying to be everything to everyone, and that's a big reason they've captured about 80% market share in their niche. With a market cap of around $30.5 billion and a current stock price of $185.28, they're a significant player in the healthcare information services space. Let's see how their numbers stack up. All right, let's talk revenue, always a critical piece of the puzzle. For fiscal year 2025, Veeva reported total revenue of about $2.75 billion, which is a solid jump from $2.36 billion in 2024. Breaking it down by product segments, their subscription services are the bread and butter, contributing heavily with $2.28 billion split between their commercial cloud and research and development solutions. Professional services added another $461 million to the mix. Geographically, North America is their biggest market, accounting for $1.62 billion, followed by Europe at $790 million and Asia-Pacific at $265 million. The Middle East, Africa, and Latin America are smaller but still growing at $68 million combined. What's clear here is that Veeva's revenue streams are well diversified across regions and product lines, which helps insulate them from regional downturns. Growth has been consistent over the years, with a compound annual growth rate that's impressive for a company of their size. This tells me they're not just resting on their laurels, they're expanding their reach. Now, let's move to earnings, because revenue is great, but profitability is where the rubber meets the road. For fiscal 2025, Veeva posted a net income of $714 million, up from $525 million in 2024. That translates to an earnings per share of $4.41 compared to $3.27 the prior year. Their net profit margin sits at a healthy 28.4%, which is fantastic for a software company, showing they're not just growing revenue, but also keeping costs in check. Looking at trends, EPS has been on a steady climb over the past 5 years, from $2.79 in 2022 to $5.55 projected for 2026. This kind of consistent earnings growth signals a business that's executing well on its strategy. Management has also been focused on reinvesting profits into innovation, especially in areas like AI, which we'll touch on later. All in all, these earnings paint a picture of a company that's financially sound and poised for future growth. Diving into some insights from their latest earnings call for Q4 fiscal 2025, it's clear Veeva's leadership is optimistic about their trajectory. They highlighted strong performance across their core platforms with significant adoption of their Vault CRM and other solutions. There's a lot of emphasis on how their AI initiatives are starting to gain traction, which could be a game changer in streamlining workflows for their clients. They also pointed out robust demand from both existing customers, expanding usage, and new clients coming on board. Management seems confident that their focus on innovation, especially in addressing industry-specific challenges, will keep driving growth. This aligns with the financial results we've seen and reinforces the idea that Veeva is not just keeping up, but leading the charge in their space. Let's take a deeper dive into Veeva's financial health by looking at their balance sheet and cash flow. As of fiscal 2025, Veeva had $1.12 billion in cash and cash equivalents, with total assets of $7.34 billion against total liabilities of just $1.51 billion. That gives them a rock-solid current ratio of 4.89, meaning they've got plenty of liquidity to cover short-term obligations. Their debt-to-equity ratio is a negligible 0.013, so they're not burdened by heavy borrowing, a big plus for stability. On the cash flow side, operating cash flow for 2025 was $1.9 billion, and free cash flow matched that since there were no major capital expenditures reported. That's a free cash flow yield of 4.75%, which is attractive for investors looking for companies that generate real cash. Return on equity stands at 13.4%, showing they're using shareholders' money effectively. Overall, these numbers scream financial discipline and give me a lot of confidence in their ability to weather any storms. Now, let's talk valuation, because even a great company can be a bad investment if you overpay. Veeva's current price-to-earnings ratio is around 32.3 based on trailing 12 months, which is on the higher side compared to the broader market, but not unreasonable for a high-growth tech company in the healthcare space. Their price-to-sales ratio is 9.2, reflecting strong investor confidence in future revenue growth. Looking at forward PE estimates for fiscal 2026, it's around 23.2, dropping to 20.8 by 2027, suggesting the stock could become more reasonably valued as earnings catch up. Compared to the industry average PE of 83.3 for healthcare information services, Veeva actually looks like a relative bargain within its peer group. However, with a beta of 1.12, it's slightly more volatile than the market, so keep that in mind if we hit a broader downturn. My take? The valuation isn't cheap, but it's justified given their growth trajectory and market dominance. Let's break down Veeva's strengths, weaknesses, opportunities, and threats to get a holistic view. Starting with strengths, Veeva's financial performance is a standout. Their consistent revenue and earnings growth, high margins, and strong balance sheet are hard to ignore. They've got an 80% market share in life sciences software, which speaks to their competitive moat. Their focus on a niche industry also means they've built deep domain expertise that's tough to replicate. On the flip side, weaknesses include their high valuation, which could limit upside if growth slows, and their heavy reliance on the life sciences sector. Any regulatory shifts or industry slowdowns could hit them hard. For opportunities, the push into AI and machine learning is huge. Their recent initiatives could open new revenue streams and deepen client relationships. Global expansion, especially in emerging markets, is another growth driver. As for threats, competition is always a concern. While they dominate now, larger tech players or nimble startups could encroach. Plus, regulatory changes in healthcare could pose challenges. Overall, Veeva's in a strong position, but they'll need to keep innovating to stay ahead. Let's check out Veeva's recent stock performance to see how the market's been reacting. Over the past week, the stock is up 3.66%, which is a nice short-term pop. However, zoom out and it's been a rougher ride, down 62% over the past month, 33.34% over 3 months, and 36.52% over 6 months. Year over year, it's down 21.17%, and over 5 years, it's declined 38.48%. Compared to the broader healthcare sector, which is up 30.49% over the past year, Veeva's underperformed significantly. Looking at the chart, there's been a clear downtrend since early last year, likely driven by broader tech sector weakness and concerns over growth slowing. That said, the recent weekly uptick could signal a potential reversal if momentum builds. For short-term traders, I'd watch for a break above key resistance levels around $200 to confirm bullish momentum. Long-term investors might see this dip as a buying opportunity, but timing will be key. All right, let's try to pin down Veeva's intrinsic value to see if the current price makes sense. I'm using a discounted cash flow model here, factoring in their historical free cash flow growth, which has been strong at over $1 billion annually in recent years. I'm projecting a conservative growth rate of 10% for the next 5 years, given their market position and industry tailwinds, then tapering to a terminal growth rate of 3%. Using a discount rate of 8% to account for market risk and their slight volatility, let's see where this lands. After running the numbers, I'm estimating Veeva's intrinsic value to be around $220 per share. At the current price of $185.28, that suggests the stock is undervalued by about 15 to 20%. This aligns with the forward PE trends we discussed earlier, indicating potential upside if they continue executing on growth. Of course, intrinsic value is just one lens. Market sentiment and macro conditions can keep a stock mispriced for a while. But for long-term investors, this gap could represent an opportunity to buy at a discount.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.